Vietnam's economy was one of the best performing in Southeast Asia this year, with GDP growing at the fastest pace in 25 years.
Vietnam's economy jumped by 8% this year.
The research firm expects the Philippine economy, along with Vietnam, to grow fastest among Southeast Asian economies in 2023.
As the world's economy continues to shift, Vietnam has emerged as a key player in Asia's economic growth story. Over the past few decades, this Southeast Asian nation has undergone an incredible transformation from a war-torn country to a thriving economic powerhouse. With a population of nearly 100 million people and a rapidly expanding middle class, Vietnam is poised to become one of the most dynamic economies in the region. The IMF has recently revised Vietnam's economic growth prediction for 2022 and has increased it from 6 to 7%. This was the only big upward adjustment among Asian countries, and it was far greater than revisions for other important regional economies, including India, Japan, and China, which decreased by between 0.7 and 1.1%. In a similar way, the World Bank increased its forecast for Vietnam's economic growth from 5.3% to 7.2%, which is the highest rate for any East or Southeast Asian country. While this came as a shock to many, anybody keeping up with the economy of Vietnam over the last several decades would have seen it coming. Vietnam has gone from having one of the world's lowest economies to having one of the fastest expanding ones, with the help of the escalating great power conflict between China and the United States. When the United States withdrew its forces from Vietnam in 1975, the country's economy was already struggling under the weight of the inefficiencies of a centrally planned economy, the aftereffects of the war, and poor productivity rates that left it reliant on imports. Meanwhile, international pressure, notably U.S. sanctions and the retaliatory Chinese invasion, worsened Vietnam's economic troubles after its 1979 invasion of Cambodia to oust the Khmer Rouge regime. With a GDP growth rate of 2.8% in 1985 and an inflation rate of 378% in 1986, Vietnam's economy was one of the weakest in Asia as a consequence of economic shortcomings and global tensions. The Vietnamese Communist Party saw the inefficiencies of a centrally planned economy and decided to switch to one that relied on market forces to distribute resources in 1986. The changes, also known as Do Mo, legalized private property rights to land and outlawed communal farming. These alterations, along with Vietnam's military exit from Cambodia in 1989, propelled the nation into one of the world's most rapid and spectacular eras of economic expansion. Vietnam was one of the region's poorest nations when the VCP initially introduced its reforms, with a poverty rate of over 70%. Over 10 million individuals were pulled out of poverty in the 2010s alone, and by 2020, that number had dropped to 5%. From less than $300 in the 1980s, the country's GDP per capita has climbed by over 10 times to $2,800 in 2020. Vietnam's good business environment has attracted foreign investments. Vietnam is becoming a more appealing business destination because of its fast expanding economy and very cheap labor requirements. In 2018, 18% of its exports were textiles and footwear, while 40% were electronics and electrical equipment, making it an important node in the worldwide supply chain for these industries. Many large corporations have established production facilities there, including Adidas, Nike, and Samsung. Foreign direct investment in Vietnam has increased significantly over the last 32 years, from roughly $40,000 in 1986 to almost $15.8 billion in 2018. Exports, however, rose by 19% between 2020 and 2021. Recent years have seen a rise in foreign direct investment to Vietnam as a result of rivalry between the world's two largest economies. Businesses are looking to diversify their supply chains as a result of rising tensions between the United States and China, a less business-friendly stance taken by the Chinese Communist Party, and a more stringent and seemingly permanent COVID-19 policy in China. While the number of foreign companies registering in China increased by 8,000 in 2020, at least 11,000 of them canceled their registration in 2021. Apple, Samsung, and Hasbro are just a few of the businesses that have opted to scale down their extensive and long-running manufacturing operations in China as a result of Vietnam's advantageous combination of low costs, strong infrastructure, supportive business environment, and successful mitigation of the economic effects of COVID-19. Many multinational corporations have relocated their industrial operations there, Foxconn, a major electronics manufacturer that works with every major tech company, including Apple, has announced plans to invest $300 million in a new factory in northern Vietnam. Microsoft has used Vietnam for certain Xbox manufacture, and Google has recently indicated that it aims to relocate as much as half of its Pixel phone production to Vietnam. A few years ago, these businesses would have relied only on Chinese factories to manufacture their wares. When compared to the same 6-month period in 2021, Vietnam's total foreign direct investment in 2022 saw an increase of 8.9% between the months of January and June. Vietnam is an active participant in global trade. Vietnam has been very busy forging bilateral trade agreements with other nations during the past few years. It is a signatory to many free trade agreements through its participation in the Association of Southeast Asian Nations. Vietnam will be able to become a manufacturing hub and increase its export base thanks to the standards of product quality, manufacturing, and employee rights specified in these accords. In spite of the epidemic, Vietnam's exports have been increased through agreements like the Europe-Vietnam Free Trade Agreement with the European Union. In 2021, thanks in large part to the UK-Vietnam Free Trade Agreement, British and Vietnamese trade was worth over $6.6 billion. With the Trans-Pacific Partnership Comprehensive and Progressive Agreement, exports to Canada and Mexico also increased. Investment and economic growth are encouraged by Vietnam's welcoming business climate and the government's pro-business policies. These are major draws for businesses thinking about setting up a shop in Vietnam. The growing number of free trade agreements Vietnam has signed has facilitated this. Vietnam still confronts significant obstacles to development in the future. The population is the biggest hurdle because it will never catch up to China's level. Although the country has made great strides in infrastructure development, it still ranks only 47th out of 160 countries. Vietnam's workforce is similarly low-skilled, and its energy supply is struggling to keep up with demand. However, Vietnam is making progress and will be able to meet these problems head-on. One of Vietnam's biggest advantages is its competitive wages. China holds a dominant position in the manufacturing industry, but as wages have increased, many corporations have already transferred their operations to other countries in order to preserve their profit margins in low-cost manufacturing. Vietnam has a young, vibrant workforce that is ready to fill the void until it can establish a competent labor force. It also has a comparatively inexpensive young labor force. Vietnam is one of the top 10 countries in terms of the number of engineering graduates, with more than 40% of university graduates focusing on science and engineering. Wages in Vietnam will increase as the country's economy develops. To prevent widespread unemployment, it must strike a balance between inflation, pay levels, and productivity. Since low labor costs cannot be maintained indefinitely, Vietnam must shift its priority to strengthening its service sector, high-tech sectors, and domestic consumption. Vietnam is investing heavily in infrastructure. Vietnam invests roughly 6% of its GDP in transport and other infrastructure. This is among the highest in the Asian region. Investments include the Long Thanh International Airport, which will eventually replace HCMC's overcrowded Tan Son Nhat, metro projects in Hanoi and ECMC, thermal and waste-to-energy generating plants, and the ambitious 1,800 kilometers PCMC Hanoi motorway. Vietnam's infrastructure, however, remains inadequate despite these encouraging developments. For instance, many manufacturing facilities still rely on human workers instead of implementing automation solutions. But the government is determined to alter this, so they propose subsidies for the technological sector. In addition, it forbids the selling of used machines older than 10 years. Future prospect of Vietnam's economy. As a result of these factors, growth expectations for 2023's economy are looking good. Despite global uncertainty caused by large power rivalry in the South China Sea and the crisis between Russia and Ukraine, the National Assembly's goal for GDP growth at 6.5% for 2023 is still likely to be met. According to projections from 3 separate groups of experts, Vietnam's GDP would expand by 6.5% or more in 2023. United Overseas Bank, based in Singapore, has maintained its projection for Vietnam's GDP growth in 2023 at 6.6%, in line with the official projection of 6.5%. Vietnam's GDP growth forecast for 2023 has been increased to 6.8% by the Asian Plus 3 Macroeconomic Research Office. According to Standard Chartered, Vietnam's economy would grow by 7.2% in 2023. To stabilize the currency and foreign exchange markets, the State Bank of Vietnam has pledged to flexibly implement monetary policy in order to maintain inflation at 4.5% in 2023. The targeted rate of economic growth would be feasible if inflation stayed at roughly 5%. Despite all the challenges, Vietnam has experienced remarkable economic progress over the course of the past 40 years, which has made it an appealing location for foreign direct investment. In addition, because the rising rift between China and the United States has a negative impact on the ease of acquiring goods, and because Vietnam is an attractive investment destination to China, it is anticipated that the country's economic outlook will trend increasingly favorably in the years to come.